I'm having with me Jeetu Kataria, CEO of DIFX. Thank you for having me in your place, guys.
Hello.
So, Jeetu, you're not only a crypto expert, you are a financial expert as well. So, why this correlation between digital assets and the traditional market is now this much close?
Well, just to give you a glimpse that I have been trading on multiple assets all my life. Since 14 years, I was an hedge fund trader for 7 years, and then I have been trading on multiple assets. And I personally feel that there is a massive gap between the crypto assets and the traditional assets in the industry today. If you see right now, I think we have 350 million users on the crypto side. But if you see the other side, we have more than 2.5 billion users who are trading on commodity Forex stocks indices. And what I have seen is when I started my digital asset journey back in 2016, and over a period of 5-6 years, I've seen that you cannot bridge this gap because crypto doesn't want to come on the traditional side and the traditional side doesn't understand what crypto is. So the vision was very clear that give a single platform where users have an option either to trade on traditional or to trade on cryptos. That's what I have been trying to do it. And it was basically done keeping in mind that we are managing few family offices for them. We do manage services apart from retail participation, whatever we have on our platform. For these families to trade on multiple platforms was painful because switching between the asset was the main issue. I'm trading on crypto. If I need to hedge my position on gold, if the market is up, I sell Bitcoin in cash it, put it on the bank and then go and trade on gold. It would have been 3 days total time just to do that single transaction or switching between the assets if the volume is larger. So this platform was made keeping in mind that it will be a cross asset where a single platform can trade each and every asset available, the large one.
So what's your views? What is your views on the correlation between the market condition now and the crypto space?
Correlation, if you see in last 2 years, if you correlate crypto market with the traditional assets, and if you see the top 10 or 15 companies listed on NASDAQ, how they have performed in last 2 years, at what price they started, at what price they peaked out, and the current situation. Because in this current situation, not only cryptos have gone down, but all the traditional assets have also consolidated. And if you see the overall performance, see the graph, you will understand that even at this price currently, Bitcoin and Ether have outperformed the traditional assets. And that's where year on year, if I see, I haven't seen any asset which has outperformed over a period of 15 years consecutively every 3 years in terms of the value, which Bitcoin has done starting from 2010 to 2022.
So you still consider Bitcoin as a hedge for inflation?
100%. Inflation, overall numbers, if I see the market, when the overall market goes down, every asset class comes down. We have seen the same thing happen in 2017. We have seen the same happen in 2008. Every asset was down when the inflation numbers are high, when there is a global recession coming in. Every asset class, because the cash out happens from every asset class. This is same because Bitcoin and the overall digital industry has grown from, I think, 200 billion industry in 2019 to $2 trillion industry as on today. Apart from Bitcoin and Ether, there were many currencies which were on billions of dollars of valuation, which was not justified at all, but they were. So the consolidation was must. If we see overall how much Bitcoin has came down over a period of last 6 months, and if we look at the altcoins, I think Bitcoin is still at the weightage of 20,000, which is below fairly valued in terms of our altcoins.
Are we in a bear market or not yet?
I don't think so yet we are in bear markets. We will see where the inflation numbers are heading. The next 2 quarters are very important. What numbers we will get in terms of inflation, and if we see these consecutive 2 numbers of inflation which are better, I feel we will see a recovery post October on the markets.
So we witnessed last 2-3 months different crises, starting from Luna, then the DeFi industry with Celsius and Three Arrows Capital. So, as an industry leader, what are the lessons learned in the past 2 months?
Looking at everything revolve, even Celsius, if you go niche into Celsius, it revolved around Luna. There was $80 billion market cap of Luna, which was not justified at all. Including that $80 billion market cap, if you look at the stable coin which they had, USD, and there was a protocol, Anchor protocol, which was made on Luna. Over there, they were offering more than 19% of yield, 20% of yield on stable coin, and there were $19 billion which were locked in. And these $19 billion which were locked in, there were not only retail, but there were lots of decentralized protocols also, including Celsius, who had invested in that protocol to generate the yield. Because ultimately for them is yield generation. Whatever they borrow, at what rate they borrow, at what rate they lend, they have a bridge, they have a gap, and that gap they need to fill it up. This is how it was done. So millions of dollars went into Anchor protocol of Luna. I think Bitcoin was 38,000 when Luna announced, the Anchor protocol announced that they are putting $3 billion into Bitcoin. As a stable coin, you raise funds, which is $19 billion. You go into a volatile asset like Bitcoin at 38,000, which came down to 30,000, you're already 25% out of money. How will you justify this? It's an algorithm-based stable coin. There is no real asset backed by it. It totally works on demand and supply. So that was important to understand. As we are in an exchange, we are very clear that it's very important to read the smart contract of the specific token or coin and go niche into it, that how the end use of funds are being used. That is very important.
Before tapping into regulation, maybe one of the problems of this space as well is how much leaders or people managing such operations, how much they have the self-awareness of the governance itself in managing this kind of fund or like Celsius. And I attended different talks with him. So how come they didn't have this, like, at least a stress test of its different scenarios? So and we now we're facing what we're facing today.
I think it's all about certain investment which large funds did in the protocol, and the smaller one will automatically follow. That's how
Follow the crowd.
That's what happened with Celsius. They were already sitting on a massive surplus, and on that surplus they need to generate the yield. And getting 20% yield was massive, and there were already 19 billion locked in as a value. And on daily basis, there was an increment on their asset value which was going up.
So you started earlier than me. Started tapping into this space in 2017. So by then, no one wanted the regulation. So they considered regulation as something that will cripple this technology and it will cripple the innovation in it. So now everybody is happy with regulation. Everyone wants to be regulated. So why do you think that?
Well, in what I feel, it's all about a perception and trust. Do you trust the person or do you trust the technology? If you're trusting the person, that is the centralized system. For example, we as an exchange are a centralized person. There is a team, there is a board member. Apart from that, we have a tech. The tech speaks for itself that we are one of the strongest custodian that secures the funds. We have a nomination tech that transparent. We are that each and every user can assign their family members on DIFX protocol, that if anything happens to them, all the assets can be transferred. How transparent it is that it is on blockchain. Whenever user writes, it's a smart contract being built. If we are going on the other side, if we are trusting the technology, which is a decentralized protocol, we need to understand, before we put in money, we need to understand the whole tech. There are n number of companies which are available right now where you pay and you can vet the smart contracts. wherein of that specific company, that what is the smart contract written, how it is written. Like recently Solana happened, wherein they blocked many addresses of the users who were having larger chunk because of that one governance. Why? Because there was a loophole on the smart contract, the way it was written, and it was very important to understand that loophole. Many people just sail the boat as it is moving up from 10 cents to $9 to $90 and $150. So that's how the cycle is, and that's how the peer comparison is done in the digital space. But for every user, no matter how much amount you invest, it is very important to dig deep. And now the information is available everywhere digitally. You just have to go on the right source to get that information, that is it the right DeFi protocol where I'm investing or not.
So with this market condition, the uncertainty, with the fear, maybe panic, I noticed, and everyone noticed, that somehow investors and mainly VCs, they are reconsidering or stepping back or just waiting the wave to pass. So how do you think this market condition will affect the investment scene in general, and means affecting the innovation in the space and maybe the future of this space itself?
I think the way market has gone in the last 3 months, I feel that the valuations, whatever valuations each and every company were doing, they will decline. And the VCs will come in, there is no doubt, because they have that dry powder on which they sit and they need to deploy that funds to show that growth trajectory. But there will be a hit on the valuation looking at the market. But if as an investor, we invest in lots of startups. As an investor, what I see that the opportunities are still there, and whenever there is a consolidation in the market, every time when there's a movement happen, there are more niche companies which comes up, and the valuations are 10 times more if you look at the past history of all these companies in back in 2017 and 19 and now. So that's what I feel, that there will be a consolidation which will be happening. Lots of companies who, based on their token matrix and tokenomics and their token growth, they were projecting their equity value. They will have to reconsider their valuations, because each and every altcoin has shed 85% of their value today, leaving the Bitcoin and Ether. So that's where I feel that there will be a reconsideration happening, but there will be investment coming in.
They will have to give more equity.
Absolutely, they have to shed more equity.
Mm-hmm. So we're shooting this video a couple of days before announcing the DIFX, announcing the future trading. So what do you have in mind? What are the plans and what's coming?
Walid, we had two platforms previously. From day one, we had one was the DIFX, which was a spot exchange, and then we had a MetaTrader 5, which was a CFD platform, wherein we have more than 600 assets, out of which we have 150 crypto perpetual, we have cross-asset, commodity, forex stocks, indices. Since last 9 months, we have been rewriting the whole architecture of the exchange, wherein we are adding all the assets what we have on MT5 platform, which will be added on the DIFX spot platform. And that platform will become a beast of itself, wherein you will have an option to trade more than 500 assets in a single platform in tandem with spots. With your spot custody of Bitcoin, Ether or USDT, you will have the limits to trade on multiple assets. That's what is coming in July, and that's where the real journey of the DIFX as a cross-asset fully insured exchange will begin.
So maybe 2 months back, you announced your agreement with Fireblocks, giving them the privilege to do all the custody work. So as someone into this space, I feel like you're giving out a lot of business and you're losing a big chunk of money while doing this. So why Fireblocks, and why you didn't choose to be your own custodian?
From day one, we were very clear that we will have a custodian in place, because in past we have seen lots and lots of exchanges, I have been trading since last 2016. At peak, I was trading on 25 exchanges back in 2019. Out of which there were many exchanges which were hacked because the security layers were not strong or they were managing their own wallets.
So, what shall we expect from the DIFX in the coming 6 months? So, what are the milestones that you are having it set for you for the next?
So as of now, we are working on increasing the asset book and doing the localization. By next 6 months, we will be doing the localization in 9 countries, where we will be going for the approval, starting the localization, community management. Apart from that, we want to increase our asset book in options, and that's where we will be working. So by next December, coming Q4, we are expecting to be at 1200 asset size, where there will be 1200 assets which will be in sync with the digital assets to trade on with leverage.
Perfect. Thank you, Jeetu. Everyone, Jeetu Kataria, DIFX CEO.
Thank you. Thank you, Martin.